Hey everybody, it's Mike from Orderflows and welcome to 2023. Today is January 1st, 2023, the first day of the new year. So, just really brief, if you like the videos that we put out, be sure to like the channel and subscribe to it, as well as, like the videos, give them a thumbs up, it helps us in that YouTube algorithm. So, as we advance into 2023, traders are looking for more innovative ways to analyze and understand order flow. So to accomplish this goal, we've developed new order flow analysis techniques that we've put into our order flow footprint software. I've seen recently other software companies have been adapting them. So, I want to do a video to sort of talk about, some of the newer ways that people, traders are looking at order flow. Because, early adopters of these new techniques are going to have an edge when it comes to their ability to identify successful trading opportunities. So it's essential for any good trader in 2023 not only to sort of embrace the order flow, but also have a good understanding of the underlying concepts and, more importantly, how to apply them in order flow. Like I said, I see a lot of software vendors out there copying, some of the forms of analysis that we're doing, and that's fine. People say, oh, don't you have a problem with that? Well, not really, because it's more mainstream, and when people know how to use it, that just benefits us, the order flow community more, because it helps take the knowledge a step further. And again, if you have a way of analyzing the market but no one else is doing it, what's going to help move that market, right? Because if I buy something, right, if I buy 5 lots of S&Ps, but nobody else is buying it, the market's not going to go up. But, when more people understand the order flow and see an inflection point in the market based off of, delta or value or whatever, and they're also getting long off of that same idea, that helps us overall, right? It's not like we're just trading in a vacuum against everybody else in the world. We need to sort of, I don't say trade together, but we need other people to also understand and, trade in the same direction as us to help us, become more successful, help the trades work out. Because again, what people don't realize is as soon as you get into a trade, there's nothing else you could do about that trade. What you need for the trade to work out is, say you're buying, right? You need more people to start coming in and buying, right? Buy aggressively to make the price go higher. But if nobody else is buying, the market's not going to go up. So, as more and more of our forms of analysis become mainstream, it just benefits everybody when we know what to look for. So this is crude oil. This is on Friday, December 30th, right? The last trading day. And, crude oil, we're getting back up above the $80 price level. And I don't know what this 2023 is going to bring, but at this time, this is around 9 in the morning, just after 9 in the morning, and we're sort of just going, sideways, right? You can see here we had made this new high, 79.50, just before 9 o'clock, and we came off after that, traded down towards, the double O area. Double O is down here. We get 01, but then we're just sort of trading, a little bit back and forth, and then the market started a little rally and then dropped quite nicely here from basically the 79.30 area back below to 78.73, which was the opening price. That's this yellow line here. And again, coming up into this area here, it just really a lot of back and forth action, right? Not really anything trending. If anything, it looked like maybe it's going to start to rally and go back up to that high at 79.50. But by looking at the order flow, now the deltas are honestly not giving you much at this point. You're getting some strong negative deltas, right? Minus 60, minus 38, but then you see a 40, a positive one, and then everything else is kind of small, 6, 10, negative 5, 0, 4, 11. And then it starts coming up in here and it starts dropping off, right? Right as this market is falling over. And what can you look for in the order flow that is telling you, what, we're not going to come back up to this high at 79.50, that we're going to start to reject it and potentially sell off. Your target should be this 78.73. And, more importantly, right, we had that high up here, came off, sort of making that run back up. I'm always watching when a market is sort of coming back up to a high of the day or the low of the day. And in this case, we start working our way back up towards this high. We get all the way up to 79.40, and then the selling comes in. Okay, but at this high bar here, what's the delta? It's -1. What does that tell you? Well, again, sometimes these deltas, they come on 0, -1, +1. You had a +1 here. Here you got -1, and this is a time-based chart. Sometimes it's a little bit more coincidental when it lands on 0 or -1 because it's a time-based chart and the chart has to close. But again, it's closing around basically unchanged in the delta. Here you had a 0, here you got a 1, here you got a -1. And how I would read that is, okay, well, trading is kind of equally distributed, right? I don't want to say it's -1, you got a lot of sellers. No, you got 1, right? -1 rather, in the delta. Okay, how's the volume? The volume is about average for what you're looking at. 167, it's a little bit on the heavier side. I mean, you got 190, but it's 134, 98, 119, 159, 147. So it's around average of what you're looking at here over the last, to what's on this chart at least. I don't see you have to go back and look at the last 100 bars or anything. Really, volume is relative to what's just been trading. Okay, so again, it's -1. That's really nothing to go off of, right? Say, well, it's negative, that means something. Okay, fine. The next bar -11, and then +23, and then -57. So it doesn't really get strong negative till you get to this -57 area. But you got green, red, red, red. What do you have? You have point of controls migrating lower, right? You got your high bar here with the point of control, right? Sort of in the middle of the bar, but then obviously the red candle, lower point of control, another bar, red candle, lower point of control, another bar, red candle, lower point of control. What is interesting on this little group of point of controls is each point of control is coming in at a level lower than the low of the previous bar. Right, so this one here is coming in at 29. The low of this previous bar is 31. And then the low of this candle is 25. The point of control is coming in at 24. The low of this bar is 21. Point of control is coming in at 20. So you've got these 3 point of controls that are migrating lower, and they're coming in at lower levels than the low of the previous bar, which is bearish, right? But again, you want to be looking at signs in the order flow. So I know volume is migrating lower, okay? But what you also want to understand, right, when you're looking at point of controls, right? Point of control is the price level in the bar where the most volume traded. That is, giving you a clue. Obviously, you got these buying imbalances in there, right? The 20, the 10, the 22, which is actually, I'll say, weighing on the delta, because when you have these buying imbalances in the red candles, essentially that's telling you supply. Again, it's 20 contracts, right? It's not 200, but again, it's giving you an imbalance, the 5 against 20. But that's kind of a supply that there's a bit more volume coming in on the offer, and that's absorbing whatever buying is taking place there. Again, I'm not saying this 10 lots is supply coming to the market. It's like 10 contracts. Right, it's 2 against 10, which is giving that imbalance. But that's something to just sort of keep an eye on when you're watching the order flow, sort of looking for these imbalance with bar direction divergences, if you will. Because if there wasn't that aggressive buying, if this was just like a normal bar here, or say normal bar, but if this 20 was just say 5 contracts, okay, now of course that would change the whole dynamics. You wouldn't have that aggressive buying, but instead of a -15 delta, you'd probably be looking at a -30 delta. But it is what it is, and it's coming in at just -11. But really, talking about the new advances, this is something that we've introduced over a year ago, and then I'm starting to see it in more and more software, is looking at the value area for a bar. So it's one thing to look at the point of controls, which gives you a very quick look at where the volume is in the bar. But when you look at the value area of a bar, you're defining, where 70% of the volume is traded in the bar and what's happening, basically. So we get up here to this high, okay, and then you start seeing obviously the value area here. That's this red bigger box, the red bigger box, the red bigger box. And what do you have, right? You're starting to gap down, right, from this value area to this value area, right? Then they sort of overlap here, and then you have another gap in the value area from here to here, here to here. And that's what you start to see when a market is really starting to move, right? You're seeing value move lower. So if I'm looking for a market that's breaking down, I'm going to be looking obviously for value moving lower and gaps in the value area. Now people are going to say, well, here you got gap here on the move to the upside. The problem with this move is this bar here, right? If this bar was higher and you're having a gap between this bar and this bar to the upside, I'd be looking at it, sort of in the opposite way I'm looking at this. But nevertheless, it gapped up, right, which I like to see, but then it gapped down, which is not what I like to see. And then it gapped back up, which I like to see, but then, again, it sort of puts in this nice little move up higher, and then starts coming down, gap, 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 gap. Okay, but by the time you get from this gap to this gap, even down in here, you shouldn't be waiting for another gap down here. You should be already starting to pick it up off of this gap and off of this gap, not even waiting for this bar here to finish with the gap. So at least you could catch something from, around the 7900 to 05 area to catch that move back down into the mid 70s, a quick 25-cent move. People say, well, this is a small move. It's 25 cents, right? Which is, in crude, it's 10 cents a tick, $10 a tick. That's a quick $250 move down. And, your stop is behind these gaps here, right? It's sort of the whole gap theory applies when you're looking at these gaps in the value area, right? Now, sort of another trick that I like to use is when you're looking at the value areas, just really quick, is when you draw them out, okay, you can draw them out fixed or until tested. So fixed would be, just either in this bar over a set number of bars, but until tested means that it's going to draw out the value area until the market retests that value area. And when I start seeing it like consecutively, right, here's one, another one, that's sort of this cascading effect, right? That's just gives me a nice visual of a market starting to move down. Just as you're starting to get it to move up here, again, I got two green ones here. I'd be looking ideally for a third one coming up in here, but then we see it shift. So even though this looked a little bit bullish coming up in here in terms of these value areas that we're not trading back into, it starts turning, and I got the bearish one, I got the bearish one, I got one, I got two. These two are overlapping. By this one again, the third one, somewhere in here, again, ideal place to get short around, 05, 06. Again, because you got one here. Maybe you're waiting for this bar to finish, or even, maybe you're getting a little excited because, again, you'd be getting short somewhere around in here between 05 all the way up to 15, hiding behind this value area and this value area for a move initially right down to this opening price, which is where it traded down into, right? And again, how I like to use these value areas, the red ones are going to be my resistance. The green ones are potential support, right? So while we're selling off, right, I got another value area here acting as resistance. Market sold off, traded back into that value area, and then started selling off again. Again, not much of a sell-off at this point from, 84, 85 down to, the mid 70s. But if you want to just throw an offer in here or a bid in here, you could have a very tight stop just on the other end of that value area to catch, a nice move. You're risking, say you're getting getting short here at 84. You just have a stop, you can call it 5 ticks at 89. Even if you just got to take profit at 69, which would give you 15 ticks profit versus a 4 tick stop, that's worth it right there. just as, if you were trying to buy it here, okay, you put in a buy limit here at 79.20, 22, and you just have a stop down here at, 19, just on the other side. Okay, you get stopped out. But you could have nice trades like this one. You're risking 4 to get back 15. So, that's how I like to use value areas. It gives me a more visual look at what's happening in the order flow, as opposed to just looking at the point of controls and the deltas. I mean, I'm still looking at the point of controls and deltas, but just gives me, a new insight into what's happening in terms of value. Because if you've ever, done analysis with value, right, that markets are always looking for value. When it finds value, it will balance. But when imbalances happen is when the market is looking for new value. Okay, so that will be the end of this video. I'll catch you guys on the next video. Don't forget to hit the like button and subscribe to the channel. Thanks, everyone. Bye-bye.